Have you ever wondered how to start investing in stocks? Well, you've come to the right place. This video will break down the process of investing in stocks into simple, easy-to-follow steps. Whether you're a seasoned pro looking for a refresher or a complete novice dipping your toes into the financial waters for the first time, there's something here for you. So if you're ready to take your first steps into the world of investing, stick around. Before you start investing, it's crucial to understand what stocks are. Simply put, stocks are a type of investment that signifies your ownership in a company. When you buy a stock, you're buying a piece of that company, making you a shareholder. Now, the exciting part about owning stocks is the potential for financial gain. As the company performs well and grows, the value of your stocks could increase, potentially bringing you a tidy profit if you choose to sell. But remember, just as the company's success can lead to gains, its struggles can lead to losses. If the company's value falls, so does the value of your stocks. Investing in stocks is a bit like a roller coaster ride, with potential highs and lows. Now that you understand what stocks are, we can move on to the process of investing. Investing in stocks involves several steps. Let's break this down into a digestible process. First and foremost, you must conduct thorough research. The stock market isn't a game of chance, it's a game of knowledge. Look into various companies, their performance, their leadership, and their potential for growth. Understand the industry they operate in and the challenges they might face. Next, you'll need to open a brokerage account. This is essentially your ticket to the stock market. Many online platforms offer this service, some with minimal fees, others with more comprehensive packages. Choose one that suits your needs and budget. Once you have your brokerage account, you'll need to decide how much to invest. This is a personal decision, based on your financial situation and your risk tolerance. A common bit of advice is to only invest what you can afford to lose. Remember, investing in stocks is not a guaranteed way to make money, but a calculated risk. Finally, it's time to buy stocks. Here you have two main options: individual stocks or mutual funds. Individual stocks can offer high rewards, but come with high risks. Mutual funds, on the other hand, offer a diversified portfolio, spreading the risk across multiple stocks. But remember, investing requires patience and a long-term perspective. It's not about making a quick buck, but about growing your wealth over time. By following these steps, you can start your investing journey. Investing in stocks can seem complicated, but remember these key points. Firstly, stocks represent ownership in a company. By purchasing a company's stock, you're essentially buying a piece of that company. It's crucial to understand this concept because it underlines the entire process of investing in stocks. Next, starting to invest requires a few critical steps. You'll need to open a brokerage account, familiarize yourself with the market, and start researching potential investments. Remember, every investment should be based on careful research and informed decisions. So take your time to learn about different companies, industry trends, and other key factors that could affect your investment. Finally, keep in mind that investing is not a get-rich-quick scheme. It requires patience and a long-term perspective. Stocks can fluctuate in the short term, but over the long run, they tend to increase in value. So don't be discouraged by short-term volatility. Keep your eyes on the long-term prize. Investing in stocks is a journey, but with these steps, you're well on your way. Remember, every investor started somewhere,